Welcome back to our Stock Market Masterclass series. I'm James, and today we're diving into the exciting world of ETFs, exchange-traded funds. ETFs have revolutionized the way people invest, offering a flexible and accessible way to grow your wealth. Whether you're a seasoned investor or just starting out, understanding the different types of ETFs is crucial for making informed decisions. In this video, we'll break down the key characteristics of each ETF type, empowering you to build a portfolio that aligns with your financial goals. We'll explore everything from index ETFs that track the broader market to sector-specific ETFs that focus on particular industries. Get ready to expand your investment knowledge and unlock the potential of ETFs. Let's get started. Index ETFs are like the cornerstones of a well-diversified portfolio. They aim to mirror the performance of a specific market index, like the S&P 500 or the Nasdaq 100. Imagine owning a tiny piece of each company in the S&P 500. That's essentially what you're doing with an S&P 500 index ETF. This broad market exposure helps to mitigate risk. Instead of trying to pick individual stock winners, you're investing in the overall performance of the market. This approach is particularly popular with passive investors who prefer a long-term, buy-and-hold strategy. Index ETFs are known for their low fees, making them a cost-effective way to invest. They're a great starting point for beginners and a valuable tool for experienced investors alike. Remember, diversification is key to a resilient portfolio, and index ETFs provide a simple yet powerful way to achieve it. So, consider adding these building blocks to your investment strategy. Now let's shift our focus to sector ETFs. These ETFs provide targeted exposure to specific sectors of the economy, such as technology, healthcare, energy, or financials. If you believe that a particular industry is poised for significant growth, sector ETFs offer a way to capitalize on that potential. For example, if you're bullish on the future of renewable energy, you might consider investing in a clean energy sector ETF. However, sector ETFs also come with a higher level of risk compared to index ETFs, since they're concentrated in a single industry. Any downturn in that sector can significantly impact your investment. Therefore, sector ETFs are best suited for investors who are comfortable with sector-specific volatility and have a long-term investment horizon. Remember, it's essential to conduct thorough research and understand the dynamics of the chosen sector before investing in a sector ETF. Let's dive into the world of fixed income with bond ETFs. These ETFs invest in a diversified portfolio of bonds, providing investors with regular income in the form of interest payments. Bond ETFs can offer a level of stability to your portfolio, especially during periods of stock market volatility. They're often favored by investors seeking a steady stream of income and capital preservation. There are various types of bond ETFs, including government bond ETFs, corporate bond ETFs, and high-yield bond ETFs. Government bond ETFs. Considered lower risk, invest in bonds issued by the US Treasury. Corporate bond ETFs offer potentially higher returns, but also carry higher high risk, investing in bonds issued by companies. High-yield bond ETFs, as the name suggests, aim for higher yields but come with the highest risk levels. Choosing the right type of bond ETF depends on your risk tolerance, investment goals, and time horizon. Commodity ETFs provide exposure to physical commodities like gold, oil, natural gas, or agricultural products. Imagine having a stake in the price movements of these essential resources without actually owning barrels of oil or gold bars. Investors often turn to gold as a safe haven asset during times of economic uncertainty. Oil, as a vital energy source, can experience price swings based on global supply and demand. Agricultural commodities, such as corn or wheat, are influenced by factors like weather patterns and global food demand. Commodity ETFs can be a valuable tool for investors seeking to diversify their portfolios beyond traditional stocks and bonds. However, it's important to remember that commodity prices can be highly volatile, influenced by a complex interplay of global factors. Thank you for joining me in this exploration of the different types of ETFs. Remember, knowledge is power when it comes to investing. Now that you have a better understanding of the various ETF options available, you're equipped to make informed decisions that align with your financial aspirations. Stay tuned for more insightful videos in our Stock Market Masterclass series. Don't forget to like, subscribe, and hit the notification bell to stay updated. Happy investing!